Hello, my dear students. In this session, we are going to consider on a specific problem from theory-based accounting. Now, this is our problem. And this problem, actually, here the retirement take place, and the retirement it is not on date retirement; it is a off date retirement. That does mean the middle of the accounting year. So when any partner take retirement middle of the year, necessary to have profit, interest on capital, or any other salary, commission, all these may have to calculate. So this type of problem it is here. Let's see in details. The partnership deed of C and D, who are equal partner, has a clause that any partner may retire from the firm on the following terms by giving a 6-month notice in writing. The retiring partner shall be paid the amount, like first one, that is the amount standing to the credit of his capital and current account, means how much amount at the time of retirement shown on the balance sheet is credit balance of capital as well as current account balance. It may be credit and debit, both the retiring partner is entitled. Now his share of profit, here this point, it is the new point. His share of profit means retiring partner's share of profit to the date of retirement, means which particular date the partner going to take retirement, and that will be calculated on the basis of average profit. On the basis of average profit of the preceding completed year, 3 preceding completed year. So this is the new clause, new information, new adjustment. When any partner want to take retirement as per their agreement, here it is mentioned that at the date of retirement, the profit will be calculated, and the profit will be calculated on the basis of average profit from the last 3 completed preceding years. So here 3-year profit in this problem will be given. So this is the second clause. First clause, that total capital balance as well as current account balance. Second clause, up to date share of profit, and that will be calculated from the last 3-year average profit. Now regarding the goodwill, half of the amount of the goodwill of the firm calculated at 1.5 times average profit of the 3 completed preceding years. Here regarding the calculation of goodwill, here also same way, average profit and 1.5 times, that will be the value of goodwill. First we calculate the average profit. After calculating the average profit, that will be multiply 1.5 times, that will be value of goodwill. Now after calculating goodwill, the retiring partner who will take retirement, his share you have to calculate, and the remaining partner or gaining partner have to bear that or have to compensate that. Further information, more information are here. Now among C and D, the C gave a notice as on 31st March 2017. This date is very important. Gave a notice as on 31st March 2017 to retire on 30 September 2017. So 6 months earlier notice is given. C gave a notice to the firm, and on that date, like balance of his capital was rupees 6,000, capital balance 6,000, and current account debit balance means negative balance. The partner C, who is going to retire, who gave a notice, as a capital it is positive balance, favorable balance, and current account debit balance means losses, excess withdraw from the firm. So these 2 opening balances are there. Now other information regarding the year profit. Here the profit for the 3 preceding completed years, where that is first year which end on 31st March 2015 was rupees 2800. Second year, 31st March 2016, profit rupees 2200, and third year, 31st March 2007, that is date of notice, here 1600. So this is a 3-year profit before the retirement. Preceding the date of retirement, 3 completed year profit are provided. Each and every year profit is there. So here we can calculate average profit. First year plus second year plus third year divided 3. That will give the average profit. From the average profit, we can calculate retiring partner's shares as well as the value of goodwill. Now the instruction part, what amount is due to C in accordance with this partnership agreement. As per the agreement, what amount remain outstanding, or what amount is to be paid to the retiring partner, that we have to calculate here. Now first we'll go for calculation, then we'll pass the entry here. This is the calculation, first calculation regarding that average profit here. Now that is profit, average profit, that is first year plus second year plus third year. So total profit 6600 divided 3-year profit. So therefore average profit came 2200. Now this, as per the notice here, that gave a notice that 30 September the C going to take retirement. So as per term, as per agreement, that retiring partner C should get share of profit from April to September. So April to September, it is coming 6 months. So this is actually average profit of a completed year. So from there we have to calculate 6-month profit. So therefore 6 share of profit for 6 months, average profit 2200. Here 6 by 12, that is 6-month profit, and 6 share here equal partner, that is half 6 share, that is coming here 1 by 2, 1:1 ratio. So therefore average profit into 6 share into time, 6 by 12, 6-month profit from April to September. So therefore the 6 share of profit here 550 rupees, and that share of profit we calculated in rough. We cannot prepare profit and loss appropriation account by the time. So therefore here the entry will be profit and loss suspense account debit to C's current account. Here actually this type of calculation, when we start the next chapter, that is death chapter, then it will be more clear, because death can arise any time. Like retirement generally take place at the end of the session, at the end of the year, but death can arise any time of the year, any period of the year. So that time you have to calculate from the last balance sheet to the date of death. So here this situation arises, retirement take place on off date, not particular end of the year. So therefore as per agreement, we have to calculate the retiring partner share of profit from the date of notice to the date of retirement. As it is mentioned, 6 months earlier notice. So retiring partner gave 6 months earlier notice, and therefore 6 months share of profit we have to calculate. So there are 2 ways. Like first we have to calculate total entire firm 6-month profit, and after that we can calculate retiring partner share. So as per instruction, that we have to calculate average profit, number 1. So average profit first year, second year, third year divided 3, it is coming average profit 2200. So out of that, 2200 here, it is a 1-year profit. If you calculate 6-month profit, it will be 1100. After that, if you want to calculate C retiring partner share profit, it is half, so that is 550. That way you can calculate. So once I again repeated that calculation, very simple, not difficult, but this is the new topic, new part, and mainly this topic we have to do in case of death of a chapter, and we are going to start that chapter after completing this different board year paper from this chapter, that is retirement. Now calculation of goodwill, it is easy to calculate. Here it is mentioned that average profit last 3 year average profit you have to calculate. So we already got average profit last 3 year. After that, it is goodwill will be 1.5 times purchase of the average profit. So average profit into 1.5 times, that is coming here 3,300 value of goodwill, and that value of goodwill, it is firm's value of goodwill, and from there you have to calculate retiring partner's share. That is retiring partner's share. Here it is half, 3,300 into half, that is 1,650. Regarding the goodwill, we know the treatment here. Only two partners are there. Among the two partners, one is going to retire, so therefore remaining partner has to receive the share or has to gain the retiring partner's shares. So ultimately D here gaining partner entire amount has to gain, and this like capital account debit to cease capital. As it is shown the current account, it does mean that is fixed capital method. So here we can use here that concept says current like this current account debit to cease current account. So ultimately this two figure, it is important for our recording. Number one says benefit for his share of goodwill, and number two says share of profit from the debt, like the balance sheet till to the date of retirement. Now here we can check our like necessary ledger account. This is the current account and capital account. Now first we can consider current account. Current account debit balance source, so therefore it is a CS current account, and to balance BD debit balance 5500. First information, opening balance of current account, exactly opening balance of capital account. Capital is favorable balance, so credit side we have to put buy balance BD here, just like a partner's capital account, which you open the partner's capital account. Generally when you open the partner's capital account, we are writing buy balance BD, A is column, B is column, C is column. So here so many partners are not there, only retiring partner portion we are opening, therefore only amount goes to C is column. So these two are opening balance. This is capital balance 6,000, and this is current account balance here 500. This shows the debit balance, so therefore we consider two side, to balance BD debit side, and this shows the credit balance, therefore we put on the credit side by balance BD. This to opening recording, and after that like amount of profit as well as goodwill, and that to benefit. Here regarding the share of profit, I already told by profit and loss suspense account 5500, we already got that amount by calculating retiring partner's share of profit from the date of notice to the date of retirement. So 6 month profit 5500 came. After that, this is the treatment of goodwill 1650, which we calculated, and the entry is there. This current account debit to his current account, or gaining partner's current account debit to retiring partner. In this cases here, no need to calculate separately gaining ratio, because only one partner is there after retirement, and that remaining partner gain entire amount. So this is the first current account we have to close here. This side it is coming to 200, and this side here 500. So balance, that is 1700 here goes like it is a credit balance. Again it is converted to the credit balance. The first time it was debit balance, now it is converted to the credit balance. So that will be closed by transferring to the capital account. So remember the this point here, the current account being closed. First time we are doing that type of current account. So when current account want to close, that time current account debit to this capital account. Ultimately balancing figure, suppose this side is heavier, then we have to write by capital. So again negative balance will continue, but in this cases here favorable balance or positive balance we can see here, because the credit side is heavier. Credit side is 2200, whereas debit side 500, so 1700 more, and that will goes to the capital account. Sys current account debit to sys capital, so in capital by current account. Now you can check here, if we record on the buy side of the capital, it does mean the capital balance increases, it is coming plus. When you record anything like buy balance BD, buy revaluation profit, buy general ledger, like that with so many item we are crediting on the partner's capital account. Already we have done so many problems, we have the idea. So whenever we record anything on the buy side, it does mean that capital, it is a liability, that liabilities increases. So therefore this is like retiring partner capital is increased due to the current account also 1700, 6000 plus 700, 7700. That amount of due actually have to pay by the remaining partner, means D has to pay, and at that moment it is being transferred to his loan account. Nothing information mentioned regarding the payment, so therefore here C's capital account debit to C's loan. If it is paid, then C's capital to cash or bank. If C can take any asset, then C's capital to respective asset. So this is the way. It is a new type of problem, a specific problem. That is why we consider here how to open a particular current account, how to close the current account, and how to transfer that current account balance to the capital account. And when the partner take retirement on the off date. Off date means any time of the year, not a fixed time, like not end of the session, end of the period. So that time you have to calculate like that from the date of last balance sheet till to the date of retirement. And this time more problem will consider in case of death. I think so this will clear. This simple, not difficult. Only these two items are a little bit different. So that is that you have to like note properly. This one, calculation of retiring partner share of profit, and when you calculate the retiring partner share of profit, and usually you can calculate the goodwill. So now we are going to conclude this session. Okay, thank you. That's all.